The topic is manage the chop, wait for your portfolios to go to all-time highs, and then double the profits. So very normal. The market trends, goes through chop, sideways motion, and then trends again. Now, during that sideways consolidation period, which is quite extended, traders change their strategy. They change their systems. They lose a lot of money. They put a lot more money into the trading categories, and then they lose everything. Then, once they lost everything, their system goes back to normal. Okay? Now, the way I see it is that not only do you have to be humble with trading, but you must also respect other people's styles of trading, because not everybody trades breakouts and trends. Other people trade consolidation and range bounded. And during that time when it's range bounded and consolidation, they are making the income and they are taking their portfolios to all-time highs. So what do we do as traders? When the market is consolidating, we're breakout traders and trend traders, and yet we are in trouble. So now we are in trouble if we do go against the strategy. We're in trouble if we risk a lot more money, and we're in trouble if we change the strategy. Okay? But if you manage your portfolio and you risk very little, 0.5%, or even stop trading or halt trading, follow the system, put it onto your track record and journal, and then when the portfolio reaches to all-time highs, boom, you're in. Okay? So that is what I want to talk about today. So I'm going to share my screen. So let's go back in history in the last couple of days. So we can start off about here, 9th of September, where there was chop. Now, chop is where the market does not trend and it does not choose a definitive angle of whether the bulls and the bears are winners. Okay? So there's this indecision period of, I'm going to fight for upside, I'm going to fight for downside, but not that much. So that leads to an undecided period called the consolidation period. So you can see that this, when you build this consolidation range, this is called chop. So I'm going to write here chop. And it was a chop. Only South Africans understand. So that's the first part of the chop. You can't do anything, but range-bounded traders, consolidation traders, they made their money, sell here, buy here, sell here, buy here. They did well. And then over here, they bought here, sold here, bought here, sold here, etc. And I'm happy for them, very happy for them. But this is chop. And as long as it is not going more than, say, 500, 600 points in any one direction, we can't profit as breakout traders or trend traders. We need that movement, and we can't control when the market trends or not. All we can do is manage our risk. So you can see here, it chopped, it broke above a high, it went back down, broke above a high, broke above below, a down, went back up. And then over here, we made a bit of income. Why? Because it trended. It chose the direction that was down. So we made an income here. Come the next day, chop. So you can't do anything about this. So in the background, you are putting in the trades that line up. So you can see here was a W formation. It broke above here. We got in and there was chop. Okay. What can we do about this? One, you can risk way less, 0.5%. Two, you don't trade. So with Supreme Multi-Trader, I'll let you know when to hold trading. Let the portfolios go to all-time highs, once the market's back into trending and is working again, and then you can risk a little bit into your portfolio to build up. And the third thing is that you can trade it with a normal risk percentage, but this is for the highly experienced traders. Now, I'm not saying you don't know what you're doing. You do. I'm not saying you don't have the emotional capability of handling it. You do. Right now, you are conditioning yourselves and you are priming for these drawdowns so that when you do take losses, you don't feel them. Okay, you can take up to 6 losses and you'll be down. How much will you be down if you're risking 0.5%? 3% of your portfolio. Is that a lot? No. With premium, we risk 2% per trade. Sometimes we take 5 losing trades and we don't feel it either. So with day trading, there is an emotional element because we are taking on a daily basis and we're closing, and also we're almost monitoring on a daily basis. But when you've gone through, let's say 3 drawdowns, you start becoming a lot more comfortable. How many drawdowns have I been through? Maybe 60, okay? And they are perfectly normal. There's nothing new. I'm not here to say anything's changed in the market. All I'm saying is we're managing our risk. So here is the chop, and all you do is when you see chop in the first few days, you box the patterns. So you take this from TradingView, you take a box or a rectangle and you box it, and you say, I ain't doing anything unless it breaks above or below and confirms a strong trend. Then over here, I ain't doing anything until it breaks above or below here. So this was today's market, and you can see it was chop, okay? The funny thing about chop is that there are many setups that take place within the chop. For example, cup and handle, get in, stopped out. You get a inverse cup and handle over here, you go short, you get stopped out. You have this W formation, it goes above, you get stopped out. So chop, you need to try and avoid it, box it, and then wait for that huge breakout, which is what we're doing, especially on a Monday. Remember, Monday is medium probability Monday, where we don't take trades, or we take trades and we risk very little, and we take higher medium probability trades rather. So you can see at the moment the market is still moving and it's still chopping. And I will let you know when we are out of this chop. So there are a few things I need to discuss with you today. How, not only how normal it is, but how you can track the performance, how to know when you're out of chop, and what you can do to double your portfolio. Okay? So if you only had good times with trading, you learn nothing. You just bank a profit one after another, and you follow your 2% or 0.5% rule, and you feel almost not entitled, but you feel like this is expected of what the market should do in relation to a system. Now, when we were banking a ton of profits, I mean, listen, if we took 16 winning trades in a row, and if one of the Supreme members didn't bank 16,000 Rand minimum, then I understand you're still conditioning and priming, but you can see the potential of what it can do. And what did I do when we were in the winning streaks? I was warning you. I was warning you. I wasn't just saying, let's celebrate, let's continue. You know, this is going to continue forever. I was warning you. Not many traders do that, because I've seen not the future, but I've seen a lot of markets, and I've seen a lot of chop. So it's perfectly normal. The 16 winning trades in a row was an anomaly. I mean, 8 winning trades in a row, that's okay, normal. But 16, that was crazy. Take a look here. Even the US, the S&P 500, which is one of the leaders of the markets, is another way that you can take a box formation, grab it, and then call it Choppy Town. It's done the exact same thing. And this here, another Choppy Town. Looks very similar to the JSE, except it has a lot more volatile spikes. So we are quite fortunate to have the JSE to trade. Okay. So now the next thing is that, how do you know when you're out of a drawdown? So to do that, we need to go to the MultiTrader Supreme Index. Now I'm going to send this to you afterwards, okay? So you can see here is the track record, and you can see here is the great environment for trading. You could see it was entering into a choppy environment, and now we are back into chop, where I said hold trading for now until further notice. So all these red you could have completely avoided because I've warned you with it. I'm taking the trades because I'm not scared about chop. I'm not scared about losses, and I've got the experience. But you can very easily halt for now. So if we go to the MultiTrader stats, the weekly stats, okay, and we look at the chart. So this is the P&L. This is the equity curve. And these are the points that are generated since a year ago. So here is the equity curve. You can see that it's moving up on a very nice trajectory, maybe about 43 degrees up, okay? So you grab the bottom, it goes up, it does well, it then chops. So look at this. How many weeks was this? This was about 3 weeks. This was about 2 weeks. Okay, so we do have this chop that takes place. Here we had 3 weeks. And what happened afterwards? It made all-time highs. So the portfolio kept going up. It then dipped. So here was a bad one. It dipped, broke back up straight to all-time highs, dipped, went back up, all-time highs. Here it made almost like an M formation, and now it's done a little dip. So if you see this chart, is there anything different to what's happened before? Yes or no? Now, initially, when will I halt trading and then keep taking the journal side of things and to keep tracking the market? When will I halt trading? It depends on the equity curve. So when will I halt trading? One, when my equity curve crosses this uptrend. So if it crosses below this uptrend, I will halt trading, keep taking, for journal and tracking purposes until it turns up, and then I will keep watching. So until it breaks this trend line, just like there's trend lines with trading, there's trend lines on the equity curve. Very few people know about this trick, okay? And now you know about it. Put a line on your equity curve, and then you will know where you can hold trading. Okay, so once it crosses this little white line, I will hold trading, and then I'll wait for the market to do what before I start trading again. When will I start trading again? After a drawdown, you feel pretty good. You don't feel more amazing with trading than once you've recovered from a drawdown where the market has come to all-time highs. What that has done when you endure the drawdown, when you experience the drawdown, is that your boost of confidence goes up. When you're in a winning streak, you get false confidence. When you are in a winning streak, you get false confidence. When you manage your risk and you're in a drawdown and your portfolio starts to trend and goes to all-time highs, that is true confidence because you've sustained it, you've done it, you've brought your portfolio to all-time highs, and you've made it during the chop. So what happens then? Right now, I believe that a lot of multi-traders have a very small portfolio, probably under 100,000 Rand. Okay. And I understand this because you don't want to, it's not that you don't want to lose money, but you're emotionally trying to adapt to the style of trading for when it does well. And then when you're ready, once you've gone through the drawdown, then you say, you know what, I'm putting in double of what I have, and I'm going to continue risking what I risk, 0.5% or 1%, because I have endured the drawdown. I think my next t-shirt that I'm going to give you guys is, I survived the drawdown. What do you think? And once you survive the drawdown, your confidence level goes up, your mental capacity goes up, you're able to trade more, you're able to put in more money into your portfolio, you're able to make up for any losses because right now you're in conditioning and priming mode, and then you'll just rinse and repeat. And once you've come out of the drawdown and the market's gone to that all-time highs, you're more likely to be in a trending market where the market will continue up, where you can obviously double your profits and cut your drawdown quickly. 4% of my portfolio, I'm down. I am not even I'm sweating because it's a hot day today, but I'm not sweating with anything to do with trading. I'm happy with how things are going. I wanted this chop after a winning streak. We need that balance and equilibrium, and then the portfolio will go to all-time highs when the market trends again.